Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you the tradable news and data you need ahead of the Wall Street Open. Coming up, big tech and eco. The focus turns to big tech earnings and economic data after the Fed dashed hopes for early rate cuts. Apple, Amazon, and Meta on deck. Chips in focus as well. Nvidia's new China-focused AI chip expected to have the same price points as Huawei's product. And oil supply is in focus too, with the OPEC Plus ministers keeping oil output policy steady, according to sources close to the matter. Now, it's not long now before Wall Street starts trading. We do have that breaking news that we've been waiting on just coming out right now as we speak. Initial jobless claims, week ending 27th of January. We were looking out for 212,000. We got 224,000. Let's cross live to Chris Vecchio now, who's standing by in New York from Tasty Live, part of IG Group. Chris, some early thoughts with this reading, and also it's been really interesting with the Fed. I guess the question is, well, did the market get the Fed, or did the Fed get the economy wrong?
I think by looking at the market reaction by the end of the day yesterday, it's pretty clear the market thinks the Fed is potentially walking into a policy mistake. If you look to the bond market yesterday, you didn't watch the Fed meeting at all. You must have thought, wow, this was a pretty dovish meeting. They must have promised those rate cuts. And if you look to stocks, you may think, well, they must have pushed back against the rate cuts entirely. And indeed, it is the case that Powell pushed back against those rate cuts. I think the context is that New York Community Bank opens up 40% lower yesterday morning. The echoes of the regional banking crisis are making their way through the market again. The Fed removes the line from its policy statement that the banking system is sound and resilient. And now it looks like the market is running for the hills. Gold's bid, you're seeing that treasury yields have moved lower. Bonds are trading at multi-week highs. And so the market is geared towards the Fed making a policy mistake. That said, we are in a situation where the Fed said they are data dependent. We have 6 weeks until the next March meeting. Today's data that just came out, the weekly jobless claims, were weaker across the board. And if the labor market shows signs of slowing down, that is one of the stipulations that Powell laid out that could make it a little bit easier for the Fed to digest a March rate cut. You're already seeing the reaction today. Bond yields lower, stocks move higher after the data. We are living in a good news is bad news and bad news is good news type of world when it comes to the U.S. economy.
And that's an interesting point because, you know, as you rightly say, the jobs data still is indicating quite a robust, although there is some easing off now in terms of that resilience. And we are seeing that, you know, the jobs numbers are indicating a slight cooling, if you like. Just taking a look at the chart really quickly, because we have a reaction on the, I'm showing you the minute chart here for Wall Street. And as you can see, there was a reaction there, and it's somewhat come back down now after ticking higher initially. Just showing you the US 500 as well, which mirrors the S&P 500, a similar trend line there, and also the Tech 100, as you can see there, that's the minute chart, quite a reaction, but it is coming back down now. I guess the other thing, Chris, is still a very big earnings week. We are waiting on big tech and, of course, the non-farm payrolls, which will be the bigger driver of markets. And what are you expecting to hear?
Honestly, I think this afternoon's and the post-close earnings are going to be more important for this market. It's pretty clear that sentiment is starting to be chipped away. Everyone was feeling really good over the last few weeks, but the earnings that we've seen in the past few days have been a little bit of a wake-up call. We're also getting a wake-up call over the Federal Reserve meeting. Look, if the economy is still expanding and corporate earnings are still growing, people aren't going to take much issue if the first rate cut is delayed until May. But if you're looking at weakening economic data, earnings that are missing the beat, particularly from these Mag 7 companies like your Apple, Amazon, Meta that are all reporting today, you're going to have a more serious problem on your hands. So I really care more about these earnings this afternoon. I think the market does too. When you look at the options market for implied pricing, the NASDAQ is effectively saying if we're going to see movement through the end of the week, a bulk of that is going to come through the end of the close today, of course, and that captures those earnings reports. So for me, I mean, it's got to be the earnings. The market feels that way. I feel the same way too. Non-farm payrolls tomorrow, it's going to drive a reaction, but it's going to be standing in the shadow of what was a very consequential FOMC rate decision.
Thanks very much, Chris, and we will be checking in with you again tomorrow when we get those non-farms. Now, we're also looking at the dollar because it is edging up slightly after the bets on the March Fed cut start to unwind. Sterling also trimming its losses after the Bank of England decision. However, with the dollar, for a longer-term view, we are joined by IG's Sean Morrison.
The more hawkish Fed has equated to a bit of dollar strength. Yesterday, we saw at the conclusion of that Fed meeting or press conference, we saw this intraday reversal, the price being rejected back off that 102.45 level. Now, that dollar index is in the process of reversing its longer-term downtrend. We do have this technical pattern, this inverse head and shoulders, which is in play, and the price has started to grind up. Now, since that news, we have seen a bit of an extension of that move, with our initial target there being 103.80.
Now, thank you very much, Sean. Apple, of course, as you heard Chris mention, is the big one to look out for. Expected to post its best quarterly earnings in 2 years. Apple's fiscal Q1, usually by far its strongest quarter, as it also ties in the Christmas holiday season. Sales of the iPhone 15 likely to give an extra boost to Apple's sales. Earnings forecast to come in at 2.1 to be compared to the 1.8 billion posted for the same quarter a year ago. Revenues expected to pass the $118 billion mark. Now, a year ago, revenues reached 117 billion. iPhone sales seen reaching 68 billion, which would be a 4% increase year on year, driven by the iPhone 15 products. Now, Amazon is another key one, expected to say its earnings substantially improved in the fourth quarter. The Street looking out for 79 cents per share to be compared with only 12 cents per share the same quarter a year ago. In terms of revenues, analysts expect it to come in at just under $166 billion. In its guidance 3 months ago, Amazon suggested that sales would come in between 160 and 170 billion. Once again, the group's cloud service, AWS, expected to show robust growth. Sales there should rise by 15% year on year. In the third quarter, AWS sales rose 12% year on year. Operating margins should also remain above 30%. Investors also keeping an eye on Amazon's online advertising business. In Q3, it rose 26% to just over $12 billion. Advertising also should have got an extra boost from the holiday shopping period. And also after the bell, analysts expect Meta to report earnings of $4.96 a share on $39 billion in revenues. Expectations are high, though. From its recent lows of $279 at the end of October last year, the stock rose past $400 earlier this week. Now, mobile phone chip maker Qualcomm, another all-session stock to watch at the open after it reported its first fiscal quarter. IGTV's Jeremy Naylor is looking at the numbers.
Yeah, Angie, we were covering this morning in the early morning call. I thought it was interesting because we saw some interesting trading last night, initially indicating higher, but then came the drop. I'll take a look at the share price in just a minute, but let's take a look first of all at what happened in terms of the numbers, because they were interesting to see what was happening. Reported sales and adjusted profit, $9.94 billion, $2.75 per share in terms of earnings. Now, both these numbers were above estimates of $9.52 billion in revenues and expectations of earnings per share at $2.37. So you can see that was a tick box to begin with. And forecast for fiscal second quarter profit indicated the current quarter would be slightly above Wall Street estimates as well at $2.30, up from $2.25 previously expected, all this on flat revenues. Then came a little bit of a change of air. Let's take a look at what happened in terms of what happens on the corporate, on the stock market front, I should say. You can see yesterday's candle had a very, very long wick on the upside. Now, this indicates to me that the markets initially saw some positives out of what happened. Let me just show you what goes on in terms of the 15-minute chart, because you can quite clearly see initially the stock market reaction here was a positive. This is 9 o'clock UK time last night when the company reported these figures straight after the closing bell. Now, bearing in mind, this is where the stock closed out yesterday's session at $148.55. We're currently trading now at 145.93. This indicates to me that all of the upside has now evaporated, and indeed we've now got a negative start indicated at the beginning of the session today. Just a quick update on where we were last night when we saw that market close. That indicates where we are. We're down 1.75% at the start of today's trade. So in about 50 minutes time, we're looking for a lower start to Qualcomm shares. Now, the other bit of good news it threw out was that the chip supply deal with Samsung to supply chips globally for its top-end Galaxy S24 model has now been ratified. So this is another positive. So why is the stock down? Well, you mentioned Apple. Qualcomm is one of the biggest suppliers of chips to the mobile sector, but it doesn't go to Apple. Apple makes its own chips and it has its own manufacturing facilities. Qualcomm is being squeezed, basically. And this is the message, I think, last night. Earnings are good. The analysts were expecting something lower, and that's another matter completely. The fact that they beat analyst expectations last night just wasn't enough, I don't think, to steer for a higher start today. Where do we go from here? We've just recently seen the stock beat the highs that we saw back on the 20th of July 2022. That was at $156.64. And quite clearly, obviously, traders thought that was too rich for what we got in terms of the outlook for Qualcomm. Recently, we've seen a little bit of pressure build in the stock market. We're opening at 145.92, and you were expecting a lower start to Qualcomm when it begins trading in around about 50 minutes time. Back to you.
Thanks very much, Jerry. That was a really interesting view, especially the 15-minute chart there. Staying with tech, we've got Nvidia also in view, because Nvidia is all sessions as well on the IG platform, which means you can trade it between 9 UK to 1. And here's the 15-minute chart for you as well, because what's interesting about Nvidia is that it is slowly, as you can see here, from around 9, let me take you back to 9 a.m. for you, ticking ever so slightly higher because there's news, a report saying that the company is taking pre-orders for its China-focused AI chip. Remember these chips that the US said that Nvidia had to make that were not as fast and special in a certain way if they were going to sell to China. So there's a report saying that those have they're starting to take pre-orders. Peloton, another one that I want to look out for, because Peloton is an all-session stock that we are looking at because it is moving quite rapidly, as you can see here on my chart. Peloton's shares tracking lower. It's all sessions there, as you can see. Lots of movement on the downside, which suggests that it will have a lower open at the start of the cash session. Just taking a look at the reason behind this, Peloton says its third quarter sales will come in between 700 and 725 million. This is Q3 revenue and it's below estimates, and it's because of slow demand, sticky inflation, also keeping its the consumers' discretionary spending in check. Many of you remember Peloton because after COVID and during the pandemic, Peloton, best known for its stationary bike and online workout classes, did really well. But it's since struggled with weakening demand as people go out and start spending on experiences that it missed out on during the pandemic. One other stock that we are keeping an eye on for you is Merck. And Merck is out with its earnings that were better than forecast. This is its fourth quarter. This came amid solid demand for its cancer immunotherapy drug Keytruda. Sales of Keytruda rose 21% to $6.6 billion. Just checking on the shares for you, because Merck is also all sessions, and there you have it. That is the 15-minute chart, and you can see that this has been tracking. There's been quite a bit of volatility there, but it has been relatively heading higher. Merck, as I mentioned again, is the company behind Keytruda, now the world's biggest selling prescription medicine. And Merck has just come out saying that its fourth quarter earnings were better than forecast due to solid demand for this drug. Now to oil prices, because OPEC Plus has just come out saying that it had an early review. Let me just show you the crude prices, if I may. That's the 15-minute chart. Let's take a look at the minute chart as well. Tracking higher as we speak. This after OPEC Plus said it would, in early March, review whether or not to extend 2.2 million barrels per day of voluntary oil production cuts that were due to expire at the end of this quarter. This is according to two sources from the producer group that told Reuters. Saudi Arabia alone accounts for nearly half of those cuts at 1 million barrels per day. Now, before we go, a quick look at Wall Street for you as we count down to the open. This is the picture for you as we speak. That's the minute chart. Let's give you a 15-minute chart as well, because this will give you a better idea of where we are headed. Those figures there coming after the reaction, if you like. Let's just give you the hourly chart there after some economic numbers earlier. And don't forget, we also are counting down to some PMIs a little later in the session. This is the latest edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.